All right, I do want to bring in our next guest to talk more about markets. Aaron Gibbs, President and Chief Investment Officer at Gibbs Wealth Management. Aaron, it's great to see you this afternoon. So Jerome Powell certainly delivering the lucky charm here that I think investors wanted to see. Do you think that this was the right reaction to his comments?
Yeah, I think he really reassured really a lot of the concerns that the markets had. So obviously, first, keeping rates low. So that was the big one. And then, then of course, their inflation and reassuring people that we are expecting slightly higher than 2% inflation this year, and really fully explaining that it's more about supply and demand bottlenecks and not about systemic and long-term inflation. It's expected, and they're not going to jump and increase rates if we see a little bit of inflation. So I think that also really helped the markets and is what really pushed them up as well. And then, of course, revising their forecast, lower unemployment, higher GDP growth. So it was really just good news across the board and what everybody wanted to hear.
Mm-hmm. So it's interesting because the Fed somehow did basically paint the most perfect scenario for markets. Yes, economic growth is improving. Yes, inflation is expected to run above that 2% target this year, 2.2%, before returning to 2% next year. But that interest rates are still not going to rise, at least for the next 2 years, it sounds like. How long can the Fed sell that story, Aaron? If the economy does improve wildly, is the Fed going to have to change course and raise rates sooner than the end of 2023?
So I would expect where we would see higher inflation for several quarters combined with somewhat of a target unemployment. I think they could go 2, 3, possibly even 4 quarters of running, let's say, slightly above 2%, certainly not hitting anything like 3, if they still haven't hit their unemployment goals. But certainly if we have hit the unemployment goals and the inflation is above that 2%, then Wall Street would certainly expect that to be pulled back. But I think there's a fair amount of flexibility. I think Powell made that really clear that we could see multiple quarters in 2021 and even beginning of 2022 of running a little higher than their target until we really meet that unemployment goal.
Is there anything, Aaron, that you're seeing in the charts that would indicate potential risks on the horizon? I mean, after some volatility earlier this month, it seems as if the major indexes have been able to stabilize a little bit this past week with way more up days than down days.
Yeah, the volatility has really come down. We were sort of hovering a little between 25 and 30 on the VIX, which is obviously a good indication of sort of the fear gauge. And that's really come down. I think part of it was simply getting the stimulus plan finally approved. Obviously, nobody wanted any further delays, and you could definitely see that as soon as the plan was approved, the VIX dropped back down to 20. So I think that helps markets. And then this is just one more reassurance that that the rates will remain low. And so I think the only big concern that could come out there is if there's any surprises when it comes to vaccination, slower than expected economic openings. Certainly those could pop up and raise the fear, but I think right now people are generally pretty confident, and you're seeing that in not only lower VIX but also a steadier economic market.
I think the biggest, big picture question that people seem to have, Aaron, is the economy going to roar back? That does seem to be the consensus, that the reopened trade is going to be very significant, that this economy at least is going to improve. But because the stock market up until recently had seen such a strong run, can the stock market still book gains as we see the economy reopen? Where do you stand on that?
So I think we really can, because we're shifting from what we have in the past, let's say 2 to 3 years, where it's really been about a growth market, into more of a cyclical market. So we're recovering. And so because of that recovery, there are a lot of stocks that are still pretty undervalued. and industries that are much more able to grow with economic growth rather than based it off of pure empirical growth, that can push us forward. So we're starting to see a real change in leadership since mid-February, and that's what's actually been pushing the markets higher. It hasn't been your mega cap tech stocks. As we've seen, the Nasdaq often had significantly more down days than the Dow or the S&P 500. And so because we are seeing this shift, I think that's really where the market can continue to grow, because the stocks that have really been left behind for the past 3 years are now taking leadership. And so as long as that economic growth is there, those types of stocks can really help. And we even see that in today's numbers. Consumer discretionary industrials were the biggest winners on today.
Another piece of news that we got this afternoon amid the Fed decision was that the IRS is planning to push the typical April 15th U.S. tax deadline to May 17th. Sometimes, obviously, for high-earning individuals, they have to pay the government, and so you can see some selling in the stock market ahead of that tax deadline. This year, do you expect it to be any different than last year in terms of how the pandemic has impacted people's taxes, their bank accounts, and thus what we might expect in the stock market in those days leading into the May 17th tax day?
Because the market has done so well, I don't see any big shifts for this year. It's not like you could, take some of your losses since the market's mostly been up for most of the year. I think the bigger issue might be if we hear more news about capital gains taxes being raised, even the long-term taxes. If that happens to come on the horizon before that May 15th date, that may be where people might try to, lock in capital gains before, new tax rates take effect. I think that would be more of an issue versus just how the market's doing for the tax date.
All right, Erin, we got to leave it there. Thanks for your take this afternoon. That's Erin Gibbs, President and Chief Investment Officer at Gibbs Wealth Management, as both the Dow and the S&P book another record high.